It can show you the industrial demand about somewhere around 500 million ounces. It can show you the last 2 years that is tracking the ETBs had invested 480 million ounces.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today I'm excited to welcome Nate Fisher, who's going to be doing today's show, giving a great overview of the supply and demand forecast for what he's expecting this year, the numbers that are out, some trends that you can look forward to, also things that maybe you're going to hear others suggest that may not always be so valid. So, great overview of supply and demand coming your way from Nate. And thank you. We've seen him on the show before, but this is his first solo video contribution. And also would like to thank Andrew Pollard of BlackRock Silver, who has brought you today's episode with their Tonopah project in Nevada. And we'll have a note where you can find out more information about that at the end. Certainly things have been going well there, and a lot of our silver mining stock friends have been interested in BlackRock. So thank you for bringing us today's supply and demand overview with Nate Fisher.
Hi everyone, Nate Fisher here from renaissancemen.org doing a special presentation for Arcadia Economics. I wanted to kind of go into a little bit of the educational side here of some of the stuff that Chris and others talk about. I'm going to be doing a presentation here for you called the Silver Industry Supply and Demand and Future Drivers. So in this presentation, I'm going to be going over the overview of supply and demand, some of the supply side questions, future drivers of demand, and some of the overall risks of investing in silver. So with this, we have, big picture, we have about 1 billion ounces per year of supply that comes in, 85% or so from mines and 15% from scrap. 85% of silver is a byproduct of lead, zinc, and gold. So you would have somebody like a Newmont that is a primary gold producer that I saw, I think, if my math was correct, it was somewhere about 54 million ounces of silver that they had produced, which would put them pretty much on par for the biggest primary at Hecla. So a lot of these companies, much bigger base metal companies, will produce silver as a byproduct of what they do. So the COMEX used to be a paper mechanism, but around March of 2020, when all the fun happened, it started to become more of a delivery mechanism. The volume of trades per day in the COMEX can be 200 to 300 million ounces, and this can spike up to 500 million to 1 billion ounces. Now, there's no doubt that the COMEX has legitimate hedging purposes. However, the problems that a lot of people have are the significant, stupid high volume of trading daily on these types of things. So you may have, like I said, 800 million or so per year mine supply that's coming in, and maybe they're hedging out a couple months of production. Maybe you're looking at 300 to 400, 500 million ounces that are constant of open interest. That is legitimate hedging, but then on a daily basis, you may have 500 to a billion, 500 million to 1 billion ounces of trading, and this is a lot of these bots going back and forth, and the big banks trading back and forth to each other. So with this, also over the last decade or so, silver primary miners have been decimated, which has led to a lack of exploration. So one of the big things I talk about a lot in my writings is the Silver Institute report. It's the best I have available to me. I know there's problems with it, and everyone pretty much in the comments probably right now are blasting the Silver Institute. I get that. So with this, it's good for ballpark understanding of where the numbers are. Like I said, ballpark. So this shows that, in 2020, the mine production was down a bit, obviously for COVID. It can show you the industrial demand about somewhere around 500 million ounces. It can show you the last 2 years that is tracking the ETBs had invested 480 million ounces. And then big pictures, these are questionable numbers. And somebody like a Keith Neumeyer has come out and questioned these numbers. But this gives you an overall big picture understanding of the numbers we're talking about here. So it's not like they're off by 1 billion ounces of mine production per year. Maybe they're off by a little bit. But then when it comes to industrial, these numbers can get a little massaged and sketchy. So we'll go into this a little bit further. other things with the supply demand questions, you'll see things like the COMEX numbers. You'll see all these people wanting to stand for delivery, and then next thing you know that they're pushed off with EFP. This chart you see here on the right was something I put together in Excel last year during July, I think it was. And then it was seeing that the September contract was, it had 26,000 contracts that went to EFP, which is the equivalent of about 130 million ounces or so. People that said, hey, look, give me the silver, but then they were turned around and shuffled out the back door. So these are some of the questions that people have. What are those EFPs? Why aren't they just allowed to take it right off the exchange? What kind of deals are they offering them? I don't have this information, but these are some of the questions that come up amongst many of us. So then you'll see things with the OCC report, where you have a Ted Butler and a Bix Weir talking about, well, maybe they're leasing out 800 million or 1.2 billion ounces, and then they're turning around and short selling it into the market. Now, I've seen evidence of a couple 100 million ounces that have been shuffled around that don't look like they're showing up on the Silver Institute report. But I don't have any of these details of these contracts, but you have somebody like a Bob Coleman that's come out and said that, hey, Bank of America has stood up something in 2020 that looked like it was a derivative of SLV and GDX. So it's quite possible that may be a good portion of what the BOA derivatives are. Don't know. But that is a plausible alternative theory, but a lot of this stuff is shrouded in mystery. So moving on, we've also seen things with tightness with 1,000-ounce bars seen for well over a year, which then leads to the Andrew McGuire weekly reports. I never miss them. He's been talking about how it's hard to get any quantities of size. Now, this isn't me just wanting to buy a 1,000-ounce bar to chop up. This is somebody like a Toyota trying to get a couple million ounces for their cars. They may have problems at getting things in size, but they probably have contracts that go out quite some time, and they're secure in getting their portion. So maybe that's problems with mints getting quantities to do the blanks and the like. But moving on, you have massive investment buying for the last 2 years of solid, and you'll see that like you saw with the 480 million or so with the ETPs, that significant addition to demand really hasn't pushed up the price of silver that much. You're talking almost 500 million ounces were pulled into these ETPs in 2 years, and the price of silver is up a couple bucks. Yeah, I don't think so. So again, the investment demand went from 20% and now it's to 50% or so, which then leads to some of the supply questions. So with this, I bring up this pie chart occasionally in my writings from the CPM group and Jeff Christian CPM group. So I get blasted for using this chart. It's all fake. It's not real. Look, again, I'm trying to use information that's available to us out there. There's different opinions on that personality out there, but I don't want to go into those types of things. What I want to look at is it's quite possible his company has used reports that have been generated over the last couple of decades. You have PhDs that may have investigated these types of things over the last 50 years. You may see reports from English shipping of tea sets back from 1735. So they have, I think they have decent information here about the above ground supply. I don't think that's the issue. I think the problem is getting that into an investable form. I think it's also a problem of recycling or scrapping it, and we'll talk about that in a second. But if you take these pictures here of the pie chart and you look at the pink side and the dark blue side, you'll see that the pink side of the jewelry, I translated these tons into ounces. You're looking at 25 billion for jewelry, 27 for industrial. And industrial, you're counting that as anything that's needed for a manufacturing line or perhaps even a mint. Jewelry, let's see what else we got there. Dental stuff, you got cars, mirrors, circuit boards. Then you have 1.6 billion for coins, 1.8 billion for bullion. So you have a total above ground stock of somewhere around 56 billion ounces. So when people say there's silver coming from the rafters, this is what they're kind of referring to, but in what form is going to be a very interesting question moving forward. So with the scrap versus recycling, you'll see that on the Silver Institute reports, they talk about recycling. And I think some people were confusing recycling on the Silver Institute report with recycling with the circuit boards that cost $75 an ounce to recover. So when they talk about the recycling on the Silver Institute report, they're mostly talking about scrap. And scrap, there are things like jewelry, 90% coinage, the sterling silver, dental stuff, those types of things which are easily refined into products that they can melt down. The one thing I thought that was very interesting, if you look at the Silver Institute reports, they have pretty much of a limit between 150 and 200 million ounces per year. It looks like 200 million ounces is the top end. Whether it was $50 silver or $25 silver, that didn't really matter. It seemed like there was a capacity issue of around 200 million ounces. So that's something I also wanted to get into a little bit with the risks down the road. But if you're looking at all the jewelry and the silverware and all this stuff that is getting melted down, if you also look at the same reports, you're seeing that the demand for that is actually more than what you're getting from recycling. So, each year you're losing 20, 30, 40 million more ounces into creating more dining room silverware than you're getting recycled. So you may be getting some of these products from 1870 getting recycled and then turned into brand new candlesticks or something. So you're getting a lot of these things. It's actually pulling more out of the ground than you're getting back. So higher prices might change that, but that's what we're talking about with scrap, which is the recycling on the Silver Institute report. And I don't want to confuse that with recycling is what many of us know about. I saw something that David Morgan had done a report on, I don't know, a year or two ago, about a company that was doing recycling of circuit boards. You're able to take circuit boards, add some chemicals to it, pull off the metals, and then recycle that metal into goods and products. So that problem was that you're looking at around $75 per ounce to do that type of recovery, and right now it's not cost effective to do. So I think right now it's just kind of understanding the metallurgy, the chemicals, the process, and then someday if we're looking at $100, $200 silver, these types of things may come into play to unlock more supply. So as evidence of this, there's a local refinery by me in Philly, maybe about an hour and a half away, where if you look at their website, you can see where they are buying stuff. And they're buying jewelry, they're buying things from individual sellers, probably like coins, bars, dentists, their crematories, those types of things they're buying and they're turning into bars for selling for products now. So when you're looking at the big picture to supply, that pink side of the chart, you're talking about, the 25 billion ounces of jewelry. But, there's things in tea sets, silverware, etc. that are probably falling under the industrial demand side of things. So, like I said, you can probably look up all of this stuff with PhD research over the last 100 years. You can probably find shipping reports and get a good understanding of how much physical supply is above ground. And with this, if the price starts to go much higher, let's just say it goes from $25 today to $100 next month. Now, how many people are buying tea sets and silverware at $100 an ounce silver as opposed to turning in their old stuff from the attic? So that supply demand fundamental may change a little bit. But remember, I was also noticing about a 200 million ounce cap on this. So, maybe silver gets to $100 an ounce, and then you say, hey, look, I got grandma's tea set in the attic, maybe we should turn around and sell that. Well, it's quite possible that the refineries are backed up for weeks or months, and they're not going to buy it for $100 an ounce, because by the time they get to processing your grandma's tea set, price could have dropped back down to $50. So from what I understood in 2011, they were turning down orders at refineries because they were getting so much silver in. So they got flooded with some stuff. And then again, if unless prices are much higher and refining capabilities increase, there's 30 to 40 billion ounces in this category that just cannot be unlocked. So they're talking about silver that are falling from the rafters, but if you're looking at it, there's of that 30 or 40 billion ounces, you can only pull back about 200 million of that per year. And again, we're actually making more than we're pulling back. So, there's supply there, but we can't unlock it. And likewise with the industrial supply, if you look at like a car, I got this picture off of First Majestic's website. A car may only have 20 to 40 grams of silver in it, but or 40 to 60 grams of silver in it. But if you look at it, it could be in 50 different parts. So how are you recovering the silver from that? And that's part of this whole recycling thing we're talking about, that, you're looking at about $75 per ounce. Now, you're also looking at, an iPhone. An iPhone has, I looked this one up, it has 0.4 grams of silver in it, about 29 cents or so, give or take today's price. And that's for an iPhone that today I heard is somewhere around $1,200. So if silver goes from $25 to $100 an ounce, that the amount of silver that's in an iPhone will go up to what, $1.20 out of a $1,200 product. So it doesn't really matter to these industrial users who are buying stuff. It doesn't really matter about the price of silver to that extent. So, like we said, at much higher silver prices, a lot of this industrial usage starts to become available. Now, how much? I mean, are you going to spend a couple $1 billion on capex to create this company at $100 silver, and then next week it goes down to $50 silver? No, these prices are going to have to be sustained for quite some time before people put the capex in, and then start to get the supplies so that they can then recover this stuff at $75 per ounce. So they can make, $25, $30, $50 an ounce profit, but they can't do that until those prices are up there for quite a sustained period of time. And with that, maybe after they're doing this for 5-10 years, maybe their cost of doing it starts to decline. So, and with this, the David Morgans of the world have talked about the inelastic supply aspect of this with industrial users. So, like for instance, if you're an iPhone, people just think, well, I'll just substitute silver with copper. Well, you can't. It's not a one for one thing. You would have to kind of go back and do a complete redesign of the product to then put something like a copper in it rather than a silver. But silver is the best conductor of electricity. So what you'll have with that is on this picture on the right here, you'll have the inelastic supply, where let's just say it's gas prices. Gas prices go up $1. Now you still have to drive back and forth to work. You still have to go get your groceries. So basically you grumble about the price of gas, but it doesn't really change your consumption much, except at the fringes. Now, instead of driving 1,000 miles for a family vacation, maybe you're only going to do a local vacation. So you'll see some demand come down with this, but not a lot. But on the far right hand side here, you have this perfectly inelastic supply, and that might be your iPhone. They don't care really what the price of it is because they use so little of it. Now think about, silver's in Band-Aids, it's in stretchy pants, and it's in such small quantities that the price doesn't really matter to many of them. It does to like a solar panel company, because I'll get into solar panels in a little bit, but something like that uses a large portion of silver might have a more sensitive aspect to the price here. Now, another aspect of supply we talked about with the pie chart, CPM talks about you got 1.8 billion ounces for bullion. You got SLV itself has 600 million ounces. PSLV has 150 million. You got COMEX is 350 million ounces. Now, of that, you have about, give or take, 80 million or so registered. Then you have this 250 million that are eligible. Coins somewhere around 1.6 billion ounces. So all of these things are available, but they're kind of locked until you have higher prices. And that's the thing that we're getting at here, is that how much supply is available at $25. Now, think about those coins at 1.6 billion ounces. Now, a lot of these people that are holding this, maybe they're not willing to sell until $50 silver. So while that's supply, it's above ground supply, it is not available. And that's the big thing that I want to get at here, is that the COMEX has 80 million or so registered and that's for sale now. So if a Toyota wants to go get 1,000,000 ounces, they could, in theory, go there, say, I want the metal, and take it out within a couple weeks. And lastly, with the supply, I talked about the above ground. Now you have the underground supply. So with that, as I mentioned, we mine about 850 million per year. Keith Neumeyer and others have said that they're seeing lower grades, and it's now found at 8-to-1 of gold. Now, there's a misnomer here. Because it's found at 8-to-1 to gold, then they think that the price of silver should be 8-to-1 to gold, and that's a little bit of a problem, because we were just talking about the supply and demand above. Now, if you think about it, platinum is 30 times rarer than gold, but it's half the price of it. So just because the supply is rarer doesn't mean it should be more valuable. You're talking about the demand side of things. Now, I can see, and you're going to see in a couple slides, I can see how the demand of silver is increasing at such a rapid pace. And if you're looking at a chart like this, and you can see the mining rates are decreasing, which means then it costs more to pull it out of the ground. And then you're also looking at, this here is the primary silver producers, where their average yield is, I think it's ounces per ton. But what you're looking at then is you have the lead and the zinc producers. They're probably producing less and less silver per year just based on grades. It helps with their profitability, but there's no dial that they're just turning up to get more silver. So we're getting less and less out of the grounds from the byproduct. And then the primary producers, they have to spend more and more and more to get it out of the ground. So you'll have the primary producers like First Majestic, Pan American, Fortuna. A lot of them have taken on gold in order to keep the lights on, because the price of silver has gone up a little bit, but their costs of operating have gone up significantly too. So the lack of exploration have really hurt their supplies. Then you have big projects like Discovery and Bear Creek that I love as a mining stock investor. But a lot of these mines that are coming online or supposedly coming online are lower grades, and they need higher prices in order to succeed. But with this, for instance, you have a Chesapeake, and with that, you have 530 million ounces of silver there, but it's at 14 grams per ton. It's not economical to mine as a silver mine. Now, luckily, with Chesapeake, you're looking at 19 million ounces of gold with it. But the problem that you run into with Chesapeake is perhaps, a problem with how you're recovering the gold. Now, there are some processes out there that supposedly can now get that gold out of the ground, and with so, you may unlock that silver. So that is yet to be seen. I think Chesapeake is coming online in 2026. But that 530 million ounces is not coming online in 1 year. That's something like a 30 or 40 year mine life. So you might get 10 million ounces of silver, 15 million ounces of silver from them. Discovery is 1 billion ounces, but I think it's 600 million ounces in their what they're proposing of a higher grade. So when these mines are coming online, I'm looking at potential deficits of 1 to 300 million ounces in the next couple of years, and these mines that may come online may only be 5 to 10 million ounces each, and there's only a few of them. So you're looking at drastic shortages that are coming up that I want to talk about. So lastly, with this, I've seen some reports on Twitter that have potentially 19 years of production left of silver, given what's left in the Earth's crust and at the rate of which we're taking it out of the ground. So you see these mines grades have declined by a half in 15 years or so. What do you think is going to happen in the next 15 years or 20 years or whatever? So these grades are going to go down further, and it's going to cost more to get it out of the ground. And unless price goes up, you ain't getting any more out of the ground. So to recap some of the silver supply, you have the mine with the decreasing in grades, prices are going up. The Comus registered is available today at this price, but at 80 million or so sitting in registered, that's only roughly about 1 month of global demand. You have people suggesting that the JPM, Bank of America, have a short pile. Now, if it exists, and if it had existed, and if this short selling is going on, you could see potentially over the course of the last year that there's evidence that a lot of this pile could have been drawn down. when you're looking at a lot of these different reports that I look at. So how much of this pile could be left? Could there be 800 million ounces left? Could there be 100 million ounces left? Don't know. Also, with supply, scrap is up to about 200 million ounces that you can reconstitute into other things, but we're taking more in industrial than we're recycling every year. And in summary, estimated at this price, we may have 2 or 3 months of demand, and that's just based off of what we're talking about with all of the above items. So with that, it's quite possible right now, over the last year and a half, with the silver squeeze and the like, it's quite possible we've had monthly deficits that have been eating at whatever stockpiles are out there, and no one can tell you how much is left. It could be next week, where the amount at $25 is exhausted and price needs to go up to $27 or $30 to shake some loose. No one can tell you exactly when that $25 amount is going to be exhausted. Next thing here, I wanted to go into demand drivers before going into some of the risks. But with the demand drivers here, we all know that solar panels, EVs, silverware, jewelry, these are the big things that are being used. And with this, the electric vehicles, I did some massive deep dive on the demand side of things. I feel by 2026 are going to be phenomenal for silver. And let's just look at some of the big picture items here. So if you look at the top 10 manufacturers in 2018, you're looking at 60 million ICE vehicles, and those are the gas-powered and internal combustible engines. You can see 60 million or so vehicles were made by them, 77 million total, which came up to roughly about 90 million ounces of silver from the auto industry. So you're looking at that, it's roughly what? 10%, give or take, of the entire yearly supply is being used for automobiles, for ICE vehicles. Now, if you're talking about EVs, which everyone wants you to push you to, you're looking at about 5 ounces of silver per Keith Neumeyer for some of these new EVs that are coming out. So if you look at last year and 5 million EVs were made, you're looking at 25 million ounces just from those 5 million. And some of the reports you see that they want to have 50% EV production by 2030. I think it could be faster than that based off of what we're seeing with these automakers right now. By 2026, I feel that the requirements will take us somewhere to around 250 million ounces from about 90 million ounces now. So where's that 120 or so million ounces coming from? Where's that deficit coming from? Is it coming from stockpiles that are being drawn down? Or are we going to have to shake some supply loose from 1,000-ounce bars? So is price going to have to get to $30, $35, $40 in order to get some of this supply? And likewise, solar panels are a huge driver. So photovoltaics were 105 million ounces in 2020. But looking at my research, I had found that California has a law that requires new homes to have solar panels. And they're making about 80,000 homes per year, but they need to have about 180,000. So they've been running at a shortage of building homes. Now, with the recent run out of California, I'm not sure how recent that is, but you get the idea that just California alone may need to have 1.6 million ounces per year just for the homes for solar panels. Now, that's, one of 50 states that we have here. It's our most populous, but think about other countries that might be doing this. Think about right now with the Russia stuff, with the gas and power issues in Germany and France and the like, and many people don't want to go to the nuclear. It's quite possible that you have over the next couple years, you might be looking at a significant growth in the solar panels for home usage. Now, in this country, in California, you would have rolling blackouts a lot during summertime because the population was so great, the grid couldn't support all of the requirements for air conditioning. But what happens if each of these houses that are coming online have solar that can sustain their power needs for the year, and they're not pulling from the grid then? So you can see that as a model that when new houses are getting built, you could see to have solar panels on each house. Now, I got solar here, and my number of solar panels comes out to be roughly about 20 ounces of silver that is on my roof. So I looked at some of the reports that you have, and one of these reports had the silver usage. What was it? The compound annual growth rate of 6.9% from 2021 to 2026. That took you up from about 105 to 170 million ounces. Just looking at that growth rate. But the Silver Institute showed a 14% increase in the solar panel between 2020 and 2021. This could potentially take us over 250 million ounces by 2028. And that's the second chart you see on the right that I did. You also have catalysts here with the energy supplies that I was talking about. Now, if people are starting to think that, hey, wait a second, my local energy company may not be able to provide power all the time, what's going to happen to all my food that's in the freezer? How am I going to cook my foods with my electric stove? So you may start to see more people get to look into solar. So while it was 100 or so million ounces last year, it's looking that there can be another 50 to 300 million or so ounces by 2026, 2028. So where are these yearly deficits coming from? So where are they supplying it? So if you're looking at that, you're looking at between the auto industry and the solar industry, as you're looking at a possible in the next 4 years of 200 to 400 to 500 million ounces per year of a deficit. What are the silver prices going to have to be in order to get more mines online to boost the exploration? And now here's the funny thing. Most people don't realize that, yeah, you'll have a First Majestic that maybe have a mine that's on care and maintenance, but maybe that boosts another million maybe per year from a First Majestic. But the exploration process from the time you look to explore until the time silver is coming to the ground could be 12 to 15 to 18 years. So most people don't realize that with the ESG drivers that are coming up right now, people just don't realize where this metal's coming from. They just think that somebody will just increase production. From what? So in that respect, I think the demand drivers have a higher silver price coming significantly in the next few years. But with everything, there are risks. And with this, I wanted to go into a couple of these. How long can they keep the price down? Now, with this, we had the JP Morgan 1 billion manipulation that Chris has gone over a few times. With this also is a Giffen good. Now, a lot of my friends were looking at $27 silver and they rushed out to get it. Nate, where can I get it? How can I get it? They're paying $10, $15 premiums on Eagles. And, when it was $16, I'm begging them to go buy it. And they waited until silver was like $30. They're out at $40, $45 an ounce right now. And when price goes back down, then they get angry and they get upset because now silver's worthless. Silver is a Giffen good, so that as the price goes higher, it kind of defies the laws of supply and demand. So with this, you're kind of, you want the price of silver to go up so more people see it going up, and therefore people will pile into the trade. But if the banks or whoever is able to push the price down, it kind of turns that Giffen good into, not being a Giffen good. So as long as they can keep that price down, it keeps people from flooding into it. So I can do a whole other presentation on those types of things. Let me know if you want to see any of that in the comments. But with this, what's another risk that you have? What's your investment window? A lot of people come into silver, like my buddies. They want wear Lambo. They want to buy silver at $25, and next week they want it to be $150 because Nate said so. And there's no patience in any of these investments today. Everyone has seen these crypto returns of 10,000% in 6 months, and that's what everyone's going for. But that's not real. A lot of the liquidity in the system is going to come crashing down at some point. A lot of that stuff is going to get baptized, if you will. So I believe strongly that the silver window of several years is going to be tremendous. But what is your investment window? Is it 2 months? Is it 20 years? And there's people that have probably bought in at 2011 at $40, $50 that are still holding on to it, that are still waiting for their $100 silver. So you have risks there that in the short term you can have price movements down, up, whatever. You have global recession and depression risks. Now you have Hunter versus Oliver versus Brent versus Harry Dent versus Mike Maloney versus Schiff. You have all these different theories out there what could happen, but there's no doubt we're in some really uncharted territories right now with the East versus West, and no one really knows what's going to happen. And it's quite possible in a really terrible liquidity event, it's quite possible that everybody does run to the dollar and the dollar goes up to 130, 140. It's quite possible. Or it's quite possible you have a Michael Oliver situation where he's talking about the arm wrestling over the next year or so, and gold slowly goes up in price as some of the indexes decrease in price. So I have written some articles on this. One of them was, could they let it burn? And this talks about how these rates are going up recently, and how I wrote an article a couple months ago saying, well, in order to save the dollar, they may let some of these markets burn down. What good is having a market if your dollar is worthless? Then last summer I wrote something, it's called The Pin That Pops the Everything Bubble. And with this, I wrote about, hey, if you're 10, 12, 15, 20% inflation, who in God's earth is buying your 2 or 3% bonds? And you need to really look in the mirror on that. I know there's people out there that are bond gurus. Obviously you have your pension funds that are required to buy certain things like this. I get that concept. But bigger picture, when we're talking about 3% inflation, that's one thing. But we're looking back at 1970s inflation right now. And I'm sorry, but I can't see how somebody with fiduciary responsibility, if you're looking at 17% inflation, why are you taking your customers' money and putting into 3% 10-year or 2.6% 10-year? Well, I don't understand it. And I think that model of what people have been doing with the 60-40 is about to break. And that being said is, you know what, I'm not an industry guru. I'm not in a lot of this. Don't listen to me on this. But it just seems that, with high inflation, there's a lot of things that could break upcoming. So that's a risk to silver as well. I mean, could we see $9 silver again? Probably not likely, but I can't rule it out. So you have to keep in mind that with global recession and depression, anything is on the table here. Now, if I want to put it into a time capsule for 5 years out or 10 years out, and could it go down and back up again? Sure. Now, with these, also with some of these risks, you have much higher interest rates that can really affect buying any kind of new car, or make lending for solar more expensive. I got solar dirt cheap with lending rates. But as these rates start to go up, I mean, can you imagine, hey, gas prices are $1 more, so go out and buy a $70,000 EV. Well, if the rates are 1 or 2%, maybe. But as these car rates go up to 6, 7, 8, 10%, who's buying a $70,000 EV when gas prices are $1 more? No one. And with that, that's the silver demand I'm talking about. And likewise, like I said, if you have these laws out there that are requiring homes to get solar on them, but mortgage rates are going through the roof. If lending for solar is 10, 15%, no one's paying cash for this kind of stuff. If you can't use this leverage cheap anymore, then what happens to the demand of all of it? What happens in a global recession, depression, when, industrial products, and nobody buys TVs anymore. No one buys cars anymore. These types of things will slow down industrial usage. Now, we've seen that the investment demand has increased significantly. But if we're in a liquidation situation and people run into coin shops selling their silver, that's not really new demand that's pulling silver out of the ground and into the coin shops. You're taking my silver that I sell back to a coin shop and you're selling to someone else. That's not new demand. Another risk here is significant increase in refining capabilities. Now, if you can see a picture down the road where, you will need a lot more of this silver recycled at $100 silver, scrapped, and these refineries are backed up. I mean, how much does it cost to build these refineries? Millions upon millions of dollars. It's not cheap. So no one's really building these refineries so they can melt silver down. But if you have a significantly high price of silver for a long period of time, it's quite possible then some refineries then expand their capabilities. Maybe they run more shifts. Maybe they are able to do from 200 to 300 million a year overall worldwide. So there is a risk there that we can unlock some more of that supply. And lastly, breakthrough in recycling technology. Now, as we mentioned, there's 56 billion or so ounces, and maybe 10 or 20 billion of those are locked into circuit boards. But what happens someday when that recycling technology, there's a chemical compound out there that can take the silver right off of a circuit board? It doesn't really exist now, and maybe at $100, $200 silver, this is unlocked, and maybe silver goes up to $150 an ounce, and this recycling happens, and then it starts unlocking, another 200 million ounces per year. That will be a cap for the price of silver, maybe $100, $125. So, you hear people out there talking about silver might be $1,000 an ounce or $2,000 an ounce, but if you have 40 billion ounces of silver above ground, and it's just a matter of unlocking it, you're looking at higher refining capabilities and better recycling technologies at higher silver prices that will cap that price of silver for at least a decade or two. So with that, everyone, thanks for joining me here. Please add any questions or comments to the video here. I have a lot more slideshows to do on things like this. A couple of them are things like some of the manipulations that are going on, more on risk management, how to layer your silver investments. If you can, please check out my blog at renaissancemen.org. I write articles probably about once a week on all kinds of topics: silver, gold, mining, risk, if you will. So with it, thanks a lot. Till next time.
Well, thank you, Nate. Excellent overview of the supply and demand of the silver industry. Thank you for giving us a great description and walkthrough of that. And again, as mentioned earlier, thank you to BlackRock Silver, run by Andrew Pollard, who is bringing us today's episode, basically centered around their Tonopah West 100% controlled district package in Nevada. And I'm looking forward to having Andrew back on the show soon. We've had Dave Kranzler, that's one of our analysts, and he's talked about why his fund is invested in that, and First Majestic Silver now invested. So by all means, do your own due diligence, and you can go to blackrocksilver.com. This is not the same BlackRock that runs SLV, a very different one, but you can find out more information about the project, look at all of the details. And also, one I would really recommend is that if you are interested, contact these people, get your questions answered. Mining silver obviously is a challenging business. Silver mining even more challenging, which does not make it easy. Although that's why I like to focus on projects that have a great management team in place. And in my exploration of the mining stock world, that was one of the things that, as I continued to learn, everyone really centered on. And it kind of makes sense that if you have good people in place, that is a good formula for many things in life. So I think that's the case with BlackRock Silver, but you can find out more at blackrocksilver.com or contact them on the tab. So thank you. And thank you for everyone at home watching and being here today. That is today's show, but I will look forward to seeing you again tomorrow.